right, and welcome everyone to the stream. It is Monday. It is currently red, but don't worry, there might be a little bit of green in store later. We'll have to find out where we open. Welcome everyone to the stream. Hope you had a great weekend. Today we'll be covering a whole bunch of stuff that will help us all. Of course, we'll go through stocks, we'll go through the indices, we'll cover off on some of the lead indicators going into the market open, and then we'll focus on really some of the more refined techniques of what could be going on for the session. So, of course, we'll go through the structure of how this day may play out. Let's get into it. Let's start by talking about the US 500, that is the S&P. Some of the news on the weekends. Let's have a look here. Don't often look at news. Hopefully, a lot of members of the community know not to read the news too much. It clouds your judgment, and clarity is probably the word of the day at the moment. But most of the news was pretty bad. We saw things like about obviously the tough time going on in Sri Lanka. We've had freezing of assets in certain places, all sorts of things going on. And of course, the Twitter news coming out of Elon late last week, which is now having ramifications on the Twitter stock. You can't really trust the purchases there. When people want to do things, sometimes there'll be all sorts of shenanigans going into it. Sandollar getting things started. $4 super sticker. Thank you very much, Sandollar. Always been a great supporter of the channel. Appreciate you. All right. So let's have a look at the DXY, because this is probably the first point of call. It is ripping. Everyone is running to the US dollar, and cash seems to be king at the moment, at least the US dollar cash. Yeah, it's a big one sell off here. If we go to just this list so you can see them all, take a look at the dives being taken here by other currencies around the world. The euro getting smashed 1%, the pound getting smashed 1%, the Australian dollar, place I'm from, 1.49%. I became even poorer today, guys. I should have held even more. Sweet US dollars. Silver down, gold down, still falling and falling and falling. And I think gold could get into the 1600s potentially here before we see this switch. We'll talk about that later. So it is a currency thing here. Cash is king is really the story of the current markets. They had that kind of rejection looking day, and it's just ripped a new high straight away. That's why calling the tops, you've got to be very, very careful with this type of thing. Remember, we spoke about it over here. We obviously saw the change of trend. We saw the short. You have to be nimble and fast there. We got that switch, and it just never stopped. Once it busted through here, it was bull, bull, bull at that stage, unfortunately. Now, will it eventually turn? Well, let's have a look at the weekly and talk about the US dollar. One thing I've noticed when I'm looking at reports, when I'm reading the money flows, is there doesn't seem to be a lack of purchasing that started to come on yet. We haven't seen people selling their positions, the big players. They continue to hold strong US dollars, and this bodes poorly for what the markets around the world could be doing next. The more money that goes into the US dollar, the more money that goes into hedges, the more that's probably coming out of other markets. Things like the bond market, things like the stock market, and of course, growth assets in general. So we do definitely need to be scared. There's no doubt that I really do feel like we're going to make a new low this year. Whether we make it in the next 2 weeks or the next month or the next 2 months, I'm not sure just yet. But the clarity here is that most of these things are pretty bad. Let's see what the chat thinks here. A few of you saying US dollar is equal to euro and its highest since 2002. That's right, Bradley. Good to have you back, Bradley. I know you've just re-entered the community off a small hiatus. DJJ says more money that goes into the US, the harder the crash, most likely, unfortunately. So how do we look at it? Well, we're getting close to the zone. You notice I have this line here that was sitting around the middle. Let's have a look over here to the left-hand side. Go back in history. Previous Jan 2000, is that Jan 2001? January 2001. August 2002. Previous little level, little slither around here. Now, while that's incredibly old slither, it is at that point. So we are basically slamming straight into this. Now, this area here, I think we could see some consolidation. I will update you over the next couple of weeks. Keep watching the streams. Obviously, keep watching the videos because I will update you if we see any shift in the sentiment here. But at this stage, we're very, very close to some big numbers. This 108.20, this kind of area, we could see a new structure form. Am I still long the dollar? Yeah. Do I think the dollar will eventually turn around? I bet it will. At some point, it's going to turn this year, probably at latest first quarter next year. And what I mean by that is turn in a big way. And all of a sudden, it will start really reverting back down as money flies back into markets. I'm not that negative on markets over the next. A lot of people are now saying we're in a multi-year recession. I don't think the markets will be. I have this stronger feeling, and I'll talk about the strong feeling here for the long term if you guys want me to. Would you guys like me to talk about my concept here that I've come up with for the next 2 years? Now, I'm not sure. It's obviously evolving. It's kind of like, I'll preface it with Druckenmiller comments. He says he changes his decision every couple of weeks. That is what a trader and an investor does with new information. Things come to light. But as we stand right now, would you like to hear what I have to say? And then we'll get stuck into the charts. All right. Well, I'll give you some concepts. So I think the first concept I want to just talk about is crashes in general. And this is a little snippet of something I talk about in the group mentoring that I do. If you're ever interested in that, by the way, you can click on the links, go join our website, book a call with me, whatever, we can talk about it. But what I want to talk about here is the way a crash happens. And I'm going to say one very important thing. When a crash is led, this is correct, led by land, because this will happen in the future, be very, very scared. Now, I won't go into it much more than this, but if it's led by land, and not LED like this, but you know what I'm saying? If it's led by land, you should be scared. 100% of the time, I am scared. I am very scared. This is not led by land. It is led by currently inflation and other supply-demand dynamics. It's very important. Now, this is not saying that I don't believe property, because yes, we have to talk about property when we're talking about the future, is not going to go down. In fact, I believe it will give up many percentage points of what we put on in that pretty manic kind of buying that we saw since maybe November 2020. That's just my belief. This is not advice, it's my personal belief. So I think that when things are led by land, we're all stuffed. Land means houses. People don't understand land. Let me simplify it down. House falling, bad loans, okay? That kind of thing, the GFC. Now, you might think, oh, the GFC is the only time that happens. Yeah, right. And absolutely not. The ones that come back tend to be the ones that aren't led by this particular thing. So when it's led by a land crash, that is house crash, you will be in trouble, okay? You will be in trouble. This is not led by that. It will fall, in my opinion, but it's not going to go down like that. Now, let's talk about the secondary thing that's going on here. So, of course, we know we've got supply and we know we have demand. We know the Fed is the demand. For anyone that's never seen this before, just very important. I call supply China, okay? That's just how I deal with it in my mind. It's simplified. I'm just like, you know what? They're the ones that are providing us with the supply. They're basically the biggest manufacturer. Obviously, it's a problem. Here is the problem. Nothing's going to change here just yet for at least months. I believe somebody can tell me of this in somewhere around October. There's a vote, maybe even September. And that vote will be incredibly important to this concept. Incredibly important. So this is months, potentially years of problems, depending on how that vote goes. So we've got big issues here. All right, we all know this, yeah? But that's just to simplify our lives down to these points. Demand is controlled by the Fed. They've stuffed it up, okay? We're stuffed at this aspect. So as we saw in yields, which if you haven't watched the video, I'm happy to show you the yields again. Effectively, what's happening right now is the Fed has to go hard and fast. 75 basis points expected now, 93% likelihood next time. So we're raising rates at a pace that's incredibly fast to kill the demand so that we can get the inflation under control. As soon as that happens, what's going to happen? Well, of course, housing's sensitive to that, so that's going to have problems for a little bit. But they're going to have to go, whoa, we're stuffed. Oh my goodness, we've got to start cutting it. Cut. And the bond market's already telling us this. So what's going to happen is it's going to probably get worse before it gets better. I saw some of the rates in the future. We're talking 3.6% expectation about early 2023. So you cannot think that this market is not a nimble, fast market at the current information that we have in these markets right now. You can't think, oh, it's all over and we're going to go bullish, super hard bullish. I just don't believe that. It's not really too possible unless for some reason inflation has magically fixed itself. And even if it has started to fix itself due to the demand destruction, the Fed won't stop just yet. They have to kill it if they can. Now, remember, you can't go too high because if you push rates to what historically has been needed, and I'll just let everyone know the historical rate, whenever inflation, this is inflation, has ever gone over 5.5%, we all know one thing. The only way to kill that inflation 100% of the time in the past has been to push interest rates over the inflation number. Now, does anyone in the chat right now think that we can push interest rates to an 8.6% and not incredibly explode everything in the world, including the monetary system? Do you think that's going to happen? No. It's going to be violated. So history most likely will be violated here. And a few people have some great comments coming in. I might check them out later. But anyway, this is where the rates are supposedly going at the moment. Then the rates start to turn. And if this premonition by not me, but actually the bond market is true, then most likely sometime early in the first to second quarter of next year, we could be looking at a very, very different market where we see more people buying into, obviously, the tech side. The tech side usually is the one that comes back first. But to think that there's not worse coming, unfortunately, I'm not so sure about that. What do you guys think? Do you think there's worse before there's better? Or do you think it's better and this is all going to fix itself? Inflation's never been beaten without pushing interest rates above it. We have a huge issue here, which could fix partially, potentially even as soon as October, November this year. Absolutely. I'm an optimist. Optimism pays, guys. Being a pessimistic bear, big psycho bear eating salmon doesn't always work, unfortunately. All right, now in 2022, you're feeling pretty good being a bear, but optimism does pay long term. Just remember that. If you're not a bear and you're like, no, I like buying the market. Well, historically, you beat bears, and the bears, unfortunately, end up being the losers that don't make the sweet gains all the time. It's just the truth. You've got to be able to switch the mindset sometimes. So this is a huge part. Now, obviously, we're seeing demand destruction right now because the Fed is doing this to a degree. We're seeing things like oil falling considerably. Check out oil today, down 3.51%. Most likely, the bond market has already signaled to us that we have hit peak inflation. That doesn't mean inflation is down a lot. It just means that inflation is declining a little bit. Still very high, no doubt. So the chance of recession, incredibly high, that we're already in it, probably. If I was guessing, all signs point to it, but that doesn't mean it necessarily has happened. I don't even like the word recession. I think recession's stupid. I mean, realistically, it's just a word. By the time they've gone, we verify recession, guys. We verified it. It is a recession. The market's already done, somewhere between 60% of the damage. So this is just the general concept. Once you get this general concept, we say, okay, we have a general concept. Very cool. Very interesting. How does this help us as traders? Well, as a day trader, guess what? Does it help? Actually, I'm going to ask the chat. Chat, what do you think? Does this even help us as day trader? It's very important to understand whether this helps you or not. A lot of you coming back with the correct answer here. No, it doesn't. If you're a scalper and a day trader, truly, you do not care. You just say, where is the VIX? And if the VIX is above 20, you probably say, smiley face, look at me, I'm a god. That's what you that's what you're doing. Basically a day trader and a scalper, that's what they care about. They're like, VIX above 20? Yeah, let's go. And a lot of you are, and I understand that. I actually, contrary to most of your beliefs, prefer VIX under 20 markets. I find them more predictable. But, I know a lot of you have smiley face when VIX is above 20. So all of this doesn't help the scalper, the day trader. It's just true. It obviously more helps the swing trader, the person with the investment outlook. But ultimately, every single one of you are that. Okay? Every single one of you are actually a long-term investor as well. And you have to admit it. At some point, you're going to put some of your trading profits or some of your trading account into an investment. Is anyone not going to do that? I mean, you would probably be partially insane, but maybe you won't. So you do need to think about these concepts. I think about it all the time. I've got some kind of weird way of thinking. I just always think about this stuff. Like I was at the gym today, I was thinking about it. It's not a good way of being, but it is what it is. I love this stuff as well. So we have this blanket plan or this blanket idea. How does it help us? Well, it basically then says, okay, well, we need to simplify some of the things we want to look at. I want to know 100% what's going on here with China. I know that that's a huge trigger to fix the inflation component, which is only one of the components that we've got here as a problem. But that's very, very important. If we start to see inflation getting tackled, I do believe that we are past the biggest problem. And the next thing becomes the Fed coming back out with monetary stimulus, as in the Fed will basically start to protect the market, protect the financial stability. For anyone that says that the US can't print more money than anyone else, it's not true. They can print a lot of money. They can print unbelievable amounts of money, and no one can print more than the US. So where this helps you from an investment perspective is it says, okay, we'll give you a bit of a time frame. Probably need to expect worse. Probably in a recession. Okay, let's look at some stats here. Gary has given us great stats. Thank you very much. Join the Discord, link down the description below if you want to join the public or the private. It's up to you if you want more streams like this. But Gary is a great member, admin also. Appreciate that. To all the admins out there that do the great job and help me get a bit of time off from these crazy spam bots. By the way, if anyone has found a questionable figure on Twitter, there's somebody trying to imitate us at the moment, please make sure you report them if it is not our official handle, and do not listen to anything. I am not going to tell you to join a WhatsApp. I barely know what WhatsApp is. I am not going to tell you to buy weird crypto things. I don't even know what they are. And I certainly have no idea what an NFT really is. Okay? So just remember, I don't do those things. Do not fall for it. I hate those scammers. They're evil. So if we know that we're going into a recession, or we probably are in a recession already, let's say we feel that way. That's how we feel. Well, let's just use the average stat. The average stat of recessions is 32% down. And this is where it helps you to gain clarity in an unclear situation. You could be wrong. You could have the fear of missing out. You could not pick the bottom. You probably won't. Most of us won't. But at least you can have a plan saying, hey, well, maybe I expect worse. If I expect worse, at least could I look at the averages? Would that make sense? I think so. So that would put the market at around top to bottom. And this is just the way I think about things. I don't know if it's right or wrong. None of us 100% do. But 32% pushes us back to around that 32.50 kind of level. So basically it wipes out everything after the pandemic. It wipes it all out. And I think that's a very fair case. And obviously this is a case that I've been presented by many bond managers, by many people that have talked to me about these types of things. And most of them think this level is the general area. KRLB says, but I already invested 25K through WhatsApp. I hope that is very untrue. My God. If you did do such a thing, which I know you didn't, but if you did, contact whoever you contact your bank and get it reversed immediately. Yeah, I know you're joking. It's all good. Thank you very much to the 1,000 people that are here. So this is just the way that you end up gaining clarity. If you believe we're already in a recession based on certain indicators, if you believe the worst is still yet to come just because we haven't found a solution without completely partially destroying the economies, plus all the negative news out there, while markets can rally, does that mean it is a true movement, or it's an opportunity for the day trader to come in and potentially also have a look at it? And that's where it can help you. But of course, day traders and swing and scalpers won't really benefit too much from that bigger, longer thought process. So let's get into today's session and let's talk about the SPY here from the level it's currently at. First up, I want to know, what do you think? Bull or bear today, guys? Bull or bear? I know we're opening up bearish, so you can't go from this level. I want to say more down, or is it going to go green from here? From here. Not that it's going to end red or anything. I want to know up or down from here. Let's see what you guys think. That's correct. Someone does say everything. Absolutely. Someone does say everything. There's no doubt. There's many opinions. That's what makes the market so fun. Thank you very much, Sandola, for the $4 super sticker. Appreciate it. Here we go. I don't know. We'll wait in 30 minutes. There we go, Ryan. So a lot of you kind of mixed here. Bear, bear, bull, bear, bear, bull. Down then up. It's a very fair comment. To Valhalla. Valhalla. I can't remember. I have watched Vikings. I still don't even know how to say it. But anyway, it's not a bad TV show, old Vikings. Anyone watch the F1 on the weekend? It was pretty good. Had a lot of fun with the F1. So here's the market. Here is the low that we made on the last session, the 8th. That was the Friday jobs number. So obviously there was some kind of buy around here. Yeah, on the real market. Someone was looking here and they were like, "Oh, I'm interested." Now you'll notice that as we come into this session, the market's opening right on it. 38.70, 38.69. So the market is basically now 38.69, sitting right on that kind of little demand. So let's now scroll into the 5 minutes, see if we can get any information about how important this is. Well, let's just think about the trend so far. So it's up, down, up. Okay, new high was formed. Nothingness. Do we make a new low? If we don't really find bouncing here fairly early on the bid, could be kind of bad for the S&P. The S&P needs to find early bid here. Now, I do believe there is a chance of early bid, or as in like the first hour, we might go a little lower, then we go bull and actually move through. And I believe it's kind of like a mixture thing. People are obviously fearful. And then what can happen is the market will then rally through this concept, move to a new high, trap people into the concept. Oh, we're going long, it's all good. And then I can say it's sweeping down at that point. I am bearish on this market. Even here, I'm still feeling bearish. But to day trade the bear here, you're going to need to use different instruments. To just go in and say, I'm going to buy, a SPY, or I'm going to short the SPY or whatever. If that's what you're thinking of doing, you'll need to use a different instrument, because you could get ripped apart. And you're probably thinking more weeks into month over just a few days away, because you can't tell just yet that we've changed trend. Underneath this level, though, I think is pretty pivotal. So that's that 38.69 zone. Very important little low that was formed on the real market. And of course, where the bears really take control of this entire market is here, our defended area that we used to great effect over the last couple of weeks. And that has been at the 37.42. Underneath that, whoa, that's good. That to me feels like some 3,500 action. And for anyone that doesn't know what's near 3,500, put on your chart right now. Weekly 200 simple moving average. It's that simple. Weekly 200 simple moving average. Check it out. and then have a look in the past, and you'll be like, whoa, I'm scared of the 200 moving average, as in like the market loves it, gravitates to it. Maybe we can do it together right now. Why not? And of course, at that point, it freezes. Hello, indicators. Why are you not working? All right, we'll try a different one. There we go. I don't know what happened there, guys. We'll use the standard moving average. There we go. Got the little one there. We'll switch that to a 200. I like to make the 200 green because, green's a good color. It's one of my favorite colors. And you'll notice here the weekly. Okay, so it sits around that 350 for the SPY. Now, in the past, you'll kind of notice the gravitation of the 200. The 200 is loved. It's loved here in 2008. By the way, that wasn't the end of it, but that's where it got to. It loved it here in 2011 and 12, which was actually it wasn't a similar crisis, but it was a crisis after the rally. So we came out of recession. We had a great period. Everything was like, oh, it's all good. Whoa, what's going on over here in Europe? Oh my, I remember that. Everyone was freaking out for sure. Obviously, in the past, that freak out wasn't necessarily worthy compared to now. To think they were freaking out about Greek debt. Now we have like billions and billions and trillions of more debts everywhere. Yet, that's where we were. So here we have a very nice level, very nice level, very nice level. And then, of course, the famous pandemic that just shot through. But I can tell you that the bond market was so freaked out about this pandemic that before the Fed came in, the bond market was predicting here. I'm not even kidding you. The bond market freaked out. They were like, GFC already. Shutting the economy down was that bad. And then, of course, they bazookaed it with double US dollars. Let's do that. Isn't it ironic as well that when everybody says cash is crap, the market goes for like a year. They print the double dollars. And then all of a sudden we say, oh, no, cash is king. Cash is king. It's often the most... It makes sense in hindsight often, but you just think, yeah, why was I so dumb not to recognize that? It's because it's actually simple, but people can't break it apart. And that's a huge part of the market. It's critical thinking, slowing down. I've got a new philosophy. It's don't look at your phone notifications unless like you're a trader, obviously. But if the market's not open, for me, it isn't in the US, obviously, all the time because I'm Australian, is try not to look at your notifications very often. In fact, look at them twice a day. Look at your emails twice a day. I'm sure many of you out there do that. It's like that efficiency protocol. It's really important. So we've got that first level for the SPX here. Let's have a now look at US 500, and then we'll compare them together. So here's the US 500. Look at that defended zone. Wow, the amount of orders that must be sitting around here. So bad if it gets underneath there. I mean, that's like, I actually want to compare that just to show you with gold. Because I want to show you what I'm talking about when I say defended zone. When I say defended zone, I'm not joking. It generally is a defended zone, and it usually is brutalization when it gets through. This is a defended zone. If you're interested in learning more about this, I will be releasing a scalping course soon where I will crap on about this to a great degree. But a defended zone here is very, very important because when the market gets through it, all the orders get evaporated, liquidity kind of dries, and then you get that flow through and it just goes bang, 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 bang. Sneaky algorithm comes in and crushes. So very careful here around this 3740 in the future. If it busts, I'm not feeling the greatest. Obviously, you can see here the gold trend line, which comes off previous trend line. And then we have the bust. And that's why I'm just like, yeah, well, gold's dead for the time being. We'll come back to gold in the future. Don't worry, I haven't lost faith in gold like everybody else has. But in its darkest hour, when everyone hates gold so much, it's not an inflation hedge. I never said it was. I said it's useless against inflation. Did I not say that, chat? I certainly did. But it does pretty well. I'm just going to say this, in a falling rate economy. So if the rates fall down, ultimately gold's a bit of a currency. and it may do better than you suspect. So when everybody else hates the shiny metal, I'll be coming in. I'll be like, how many super chats did I get today? Can I afford 1 fraction ounce? And I'll put it on the desk and I'll show it to you guys. At the moment, very little ounces have been bought, but we'll come back to it. But there's the defended zone. See the similarities? We've got 4 hits here. We've got multiple hits across the board. It tries to find that defense, busts it, it's all over. And that's what happens here. Now, in terms of buying fear or buying these kinds of levels, buying fear blanket, like blindly, doesn't tend to work out. You're not going to get the low here if you try to buy this. It's going to be very hard to scalpel gold in. You're going to have to wait for structural setup. It comes back to one of the core principles I've been really slamming here for free on the channel, which is patience, react, don't predict. Has anybody here in the chat been reading this and kind of trying to follow it in their trading? Has it made it better? Just let me know. If it made it worse, let me know as well. Thank you to the 1,300 people that have joined us today. Thanks so much, guys. We have 26 minutes till the open. We're talking about defense in the markets right now at the 38.69 for the SPY, the S&P 500. That's the one we're trying and hoping, it is a hope here today, that it finds some bid early in the session. Because it comes in red, everything looks horrible, but that doesn't mean it's going to be. All right, let's see if anyone's taken that to heart. Let's see here. You know, I get it, Chris. Don't worry. It's all good. Samuel says, I'm trapped in gold right now. Okay. Well, hopefully you can ride it out a little bit. I don't really know what to say, but I hope you can hold to whatever it is, or it turns whenever it needs to for you. Pauline says, yes, it's done well. Rich says it's done well here. And Philip says, I am better because of that phrase. Yeah, I think sometimes these things hit home. Someone said something to me. What was it? Actually, it was my wife said this to me today, and she said she went to like some public, I don't know, public speaking thing or something, and then they were talking about how you write notes, and I thought, what a great concept. And they said, okay, write notes, or if you're using a computer, have 2 bits of paper, or have 2, Word documents open. On the first one, write big ideas or big impactful things. On the second one, make your notes as per normal. And I thought, what a great concept of just splitting 2 things. And that's the same thing that we're doing in stock trading, in all trading, is we're trying to say what's actually important and what is, yeah, it's cool, but it's not important as much. The big ideas, the ones that are critical. It's like I say supply is just China, and I say demand is just the Fed. Is that true? In my world, it's true, because all the rest of it is too complex and I'll get confused. Does that make sense? That was pretty good. So 38.74 right now. We know where the horror show ends up and where we probably expected after that point, which is a 3,500 before a potential bounce, maybe even a serious phase through this where it goes even falls further. I mean, it would be like catching the falling knife down here if it gets through that 37.40. I'd be very scared of it. Let's now go over to the 1 hour. Okay, so this is the futures market action. We've actually gone underneath this 38.66 here made on the futures. Maybe we'll use ES, just more people will be familiar with it. Same thing, really. And here we've actually made a low below that. And you might think, well, doesn't this matter? Yeah, it's the futures market. It doesn't matter as much. It is starting to kind of, be a little bad, but we need to find bid here early. Ideally, these are the situations based on this current structure that we've got and the not that many minutes till we open up. So first off, we move up. Ideally, we've actually already kind of made a little bit of a shift here. If we go down, let me actually check that out. Kind of looks like a bidding right now to a degree. So we fell off pretty heavily. Then we rallied during some point in the London session. Then we've sold off and we've come down to a point where actually I expect a bid. And around here is where you hope that the buyers come back in, because they've kind of already said, wow, we broke through our earlier supply that was made on the futures market. And that's why it's hard to trade this type of stuff. We've then come back down to a key level, being here and previous, which is that 38.69 that we just saw hit during the live. And now we're looking for, actually, I would like to see this break here. And that gives me a little bit of confidence in the bid, frankly. 38.79. It's very razor thin kind of trading here if you do this type of stuff, because what you're doing is whenever you're a scalper or a day trader, and why I'm not really a huge fan of signaling this type of stuff, is it's all about the entry. How have you got the entry? Can you replicate the concept of the entry? And then where are you going to get out? Even if you get into these types of entries, are they ones that will run for long enough to give you that kind of good profit? And I think that a lot of people fail in the concept of following others where they don't know how to fish for themselves. What's the point? If you follow other people just for scalpel-based entries, and let's say they pull it off for a little while, how they do it, what they do, is it replicatable? Always a question you must ask. But this is actually looking okay here. Some people will see this as a little inverse head and shoulders. There's the left shoulder, here's the head, here's the right shoulder. So theoretically, there is some form of structure here, finding base support early on in this session. And this is around the right time for it to happen. MRES, $4. Cheers, enjoying the show. Thank you very much, MRES. By the way, 2023, I am certainly coming to America. I'm super looking forward to it. I'm just going to come anyway. As long as I can somehow smuggle my way through Australian customs. I don't know. Maybe they'll block us down again. But if I can get over there, I am coming, because I would love to come to America and meet many of you out there. We do have a huge audience in America. Obviously, everywhere around the world, though, I'd love to come meet many of you out there. It's awesome to have a great trading community. So it's finding a little bit of bid here. We do have the potential of going past that 38.80, 38.79 kind of zone, which I think would be positive. I don't mind the structural formation forming here early on. It's around the right level. It's around the right type of structure. I do hope we find bid here today. Obviously, a fall underneath here would not be very good. New low here could signal further shorting for the session. You would have to be prepared to flick the switch both ways. Okay. So if it went down, let's say an example, went underneath here and then it started shorting and then instantly just rejects and gets above here, well, you just got had. Okay. Now, sometimes you will get had even with great trading systems. If that happens, you have to reverse. If you are able to, otherwise you got to walk away and smash watermelons in your backyard with a baseball bat. Okay. That's what we've got to do. I like the structure. I'd like to see bid here, and I would like to then fill what's going to be a bit of a gap here. So let's look at the gap formation. And yes, we're focusing a lot on the SPY, and you might have a favorite stock. Here's the thing about stocks right now. It doesn't matter what you think about the stocks. If the SPY falls and fails, your stocks are stuffed with it most of the time. They're all going to follow down. When the market gets algorithmically sold in fear, everything mostly falls. Maybe 450 of the stocks of the 500 fall. Unfortunately, that's the truth. This is not a rotational time, other than most people in the market are starting to question, maybe I prefer, based on the future, maybe I prefer to buy Amazon stock over holding weird metal stock A. That's what the question really is becoming. But that's more of a rotation underneath the core. Check out the video we did on the weekend. So here's the close, 38.99. That will put that gap level in. I do like to usually put my little gap zones in. I'm sure there'd be a trading view. Is there a trading view thing for this, actually? There would be, yes. Anyone know? Is there an indicator for the gap? I'm sure. I haven't even looked. I'm sure there is one. Cool. That'd be kind of cool. Like, just draws the gap from the previous session on your futures market. Calls on watermelon. Watermelon in New Zealand, I heard, got to like $100. Yeah, for anyone that is Australian out there, this is actually not one of our sponsored videos, but if you are interested in opening an account with Tiger Brokers, they do have a special promotion that I believe ends tomorrow. So everywhere else in the world can open, but the Australian one for the Apple stock promotion ends tomorrow, 6 p.m. AEST. So check that out. Links in the description if you want to check it out even more. So here, 38.76, I'd like it to bid above 38.80, ideally. We've got a gap to 38.99, which seems like it would be a logical kind of fill. At that point, I'd actually be feeling pretty good about this market towards the bull side. And I do hope that's what we end up getting. And ideally, we would move above once we get, if we end up getting, if you're feeling bullish here for this session, 39.15, we get above that kind of level. Whoo, yeah, that'd be cool because that would snap all of this nasty kind of 1 hour short that's happened here. So it all looks good. The SPY will still be the most important, even if you're following Nasdaq. If the SPY can hold and start breaking, the Nasdaq will come with it. Obviously, at the moment, the rotation seems to be Nasdaq will give you better percentage. I've followed that for a couple of weeks. Hopefully, you've been seeing the rotational switch. You can see here, even in the futures market, the Nasdaq actually didn't go back under the low that was made on the Friday. So there's the Friday low. We didn't get anywhere near it. So relative performance, I know the Nasdaq did fall more on the Friday. It's still holding better. And that's because the market prefers, they just look at the figures and they say, well, would I rather own, oh, I hate Amazon stock split. I don't even know. Would I rather own Google at 2405 or Microsoft at 267? There was over 300 and a bit at whatever point. Or would I rather own, weird stock A and weird stock B? And they're coming back to the conclusion of, well, we're pretty sure the Fed will have to cut next year to try to support the economy. There's a chance we might beat inflation, go into a deflationary boom. And the only difference between the 70s and now is going to be the main concept of we'll somehow use innovation and technology and manufacturing procedures to beat inflation like we've never done before. There's always something different in history. Remember, it's the same, but just with a slight twist. It's kind of like, how did they manage to make 35 seasons or whatever it is of The Simpsons? It was the same thing. They still got 36 seasons out of it. That's right, Lambsword, bonds and QQQ up relatively. And a good way of doing this would be like loading here, QQQ versus something. So if you want to see relative performance, you can go QQQ versus the SPY. And you can see here that QQQ, being Nasdaq, for anyone not familiar, has been relatively quite good. And you could do QQQ versus bonds, and you could do whatever. This is the great thing about being able to bring this platform in here and check it out. So we've got about 14 minutes to go. Let's go back onto the main chart. We've done some key levels here for the S&P 500. So definitely go back and check that out. We'll come back to it soon. We've done gold. Let's look at some other things here. What's going on with US 2-year and 10-year yields? Let's load up the 2-year. Well, it's now or never. I need this US 2-year to come down right now, okay? Because at the moment, we've had a gaining market with gaining yield. Not good if we want this market to actually go up. We've got DXY, that is the US dollar, mooning into the sun. That's not good for the market either. That means that we could be looking at that defended kind of zone potentially very soon in this market, especially with today. We fall through these lows. Well, that's not going to be so good. And what else have we got here? We've got copper. Obviously still very sick here. Copper down 1.78. Dr. Copper. Just quickly check that out on the chart. You can see the sickness. Demand. This is a good representation of destruction of demand caused by the Fed. The metals market's very susceptible to that. And the metals market's made the decision that everything's not so awesome. Doesn't bode well, of course, for the next couple of months in the market. So I can totally see why the bears are out there. What else have we got going on here? US oil, another one that's falling a little bit. Not too sure if I want to trade the oil anymore. I was pretty bearish on oil. I'd actually be a little bit bullish here. Got the switch. We've come back down. Yeah, I'm feeling a little bit more bullish than bearish, but do I really want to touch it? No. Well, I actually could go bullish. And yeah, I don't like anything about it. It confuses me. And when I'm confused, I don't prefer it. If you're looking at it from the perspective of how I feel this oil will play out, though, could do this kind of thing. But ultimately, I believe it's going underneath here. I think oil is going underneath 93. Whether it does it this month or next month, I don't know yet. Bobby Chang coming in. He's like, what the hell's going on with that DXY? Yeah, DXY is flying. All these sovereign yield questions being coming from now. And ultimately, always say the US dollar is the best. It is the ultimate. It's the major. When people are scared, they buy dollars. Even though every single $100 bill, I believe, has cocaine on it. Is that true? I heard that rumor once. I wasn't sure. Somebody can verify it for me. Hey, Tom, 50% of yields inverted. Is that true? I didn't see that happen yet. No, they won't because the 3-month can't invert yet. Yeah, the 3-year can't. The 3 months yield, so that is US 03YM, cannot, unfortunately, I guess it's not really the word there. But yeah, it won't be able to invert yet because how can the 3-month is nowhere near where they need to get to. I would expect inversion of the 3-month potentially. And that's where things get really scary. You get 50% plus. But again, how bad is the recession going to be? Recession is just a word. You can have soft recessions or really hard recessions. I'm predicting anyway that it's not. There's going to be an epic second one in the future where monetary policy will come back in. So it'll do all that type of stuff. Monetary policy will come back in, and then we will get the epic recession later on this decade. Unfortunately, I do believe that's coming, but I don't think it's right now. Is 3-year, 30-year the most important one? I've never seen that as being. Usually it's 2-year, 10-year that most people believe is the most important one. That's the one I've seen the most stats on. 2-year, 10-year. Some people use 5-year and the bigger one. Some people use 3-month. You know what's the best? 50% of all yields inverting. It's a great idea. It's not my idea. Someone sent it to me this year and I looked at it and I went, that's better than what I currently have. Thank you very much. I don't know who came up with it, but it's a very good idea. I think it came from a bank, actually. English teacher said, were you trading in 2008 when commodity prices spiked and collapsed rather quickly? Anything to say about that? Yeah, I was in the markets at that point. That's when I entered the markets. But I was just such a noob compared to now. So to say that I had structure back then like I do now and understanding would be, I was just like, frankly, I was just looking at Apple like $75 or whatever it was, $80 at the time. This is pre multiple splits. And I was like, they have an iPhone. It's really good. And I think this stock's damn cheap. That was my mental process, just like everybody when you came in. I was like, I understand. I know technology. I know Apple is cheap as hell. I'm going to buy some. And of course, I was in currencies back then. What's my thought process? Look, I've studied the commodities price spikes and collapses and stuff, but I don't have too much opinion of the 2008 one. The scary ones were the 70s ones, but they were obviously due to runs on it as well. What's the DAX doing? Yeah, we can check out that. So let's have a look at the German market. Still pretty okay. Is important to check out these. So you'd usually expect, this actually got a little bit of an inverse head and shoulders on it. Here's the left, here's the head, here's the right. Nice little kind of trend line. So you've got the potential here of an inverse head and shoulders at this stage. Look, there is some structural formation towards the bull. And you know it's all in because this is where people, and when I mean all in, not mean go buy all in, my God. Don't do that, guys. But what I'm saying is this is a big level. Previous low that was formed in March, we came back, we're finding some bid. Obviously, we fall through. The next level for the DAX won't be pretty. And I do think it will fall through at some point. 11.6. I mean, it would be very hard for you to find many people wanting to buy before this level down here. Look at this. Look at the pandemic. Look at what happened. Just dropping levels. My goodness. I still, a lot of you would have traded this, but people, unless you understand bonds, really understand bonds, not many people understand how absolutely insane this was for big money managers. I was literally like, wow, we are stuffed for 2 years. That's what I thought. Minimum, maybe 5. And then the bazooka came in from the world central banks. A lot of big investors didn't get in the market again. I'm telling you this, till like July and November of 2020. Heaps of them missed it. So here we go. We've got about 6 minutes till we come into the markets. We'll do a quick recap for anyone that's joining us. Thank you to the 1,420 members or people here joining us for today. Do appreciate it. If you like this stuff, always give it a thumbs up. If you don't, do whatever you want. That's all good. And we will go over this again. So the current thought process, where was that market that I had up before? Thought I had it all drawn. The current process here is basically, we'll use ES again. Okay. No, not that ES. There we go. So the current thought process is we have this 38.69 on the real market. So we'll load the real market next to it. Check on the SPX so you can see. There we go. So 38.69. So 38.69 was a previous little bit of buying from, it probably holds some orders. We're kind of testing that at the beginning of this session. So far, if we scroll down to like a 5-minute chart, things are looking like they're trying to structure up. We've got a low that was formed, little double bottom here. We've breached through this 38.80 zone, which was probably some form of supply on the futures trade. The supply has been broken. The sequence technically has been instigated, and you're looking towards actually a bid buy here early if it's going to happen. Now, if it does bust new lows and we get through 38.69, I think you've got to be relatively careful about that because it could be the beginning of a further sell before we find any bid. If you want to go bearish, that's up to you. Personally, I like these kind of markets that come in fearful and then we get them around support and then we move towards the gap closes, which in this case is 3899. So if it went back up, well, of course, it's the percentage difference, which at this stage is about 0.76. So we're sitting right on, let's call it minor kind of demand level with a decent structure on the futures leading in. And we've got 4 minutes to go. Other markets around the world kind of telling us a similar thing. We'll read this. ES getting rejected on the 200 EMA for the 4-hour chart, big resistance. So if we go 4-hour here, there's the 4-hour chart, and that's what they're talking about. Previous resistance here for the 4-hour. Again, resistance. Absolutely. I agree with you there. Has it proven to be a big one in the past? Let's have a look. There's some touches of it. I wouldn't say it's definitive. 200 is a big one, though. Where you feel very bullish is, of course, getting through these highs. And the reason why is imagine the orders. You can see it here in the ES futures when we go to the 4-hour. So thanks very much for bringing that up. Check out these little rejections. So we've got here rejection wick, rejection wick, rejection wick. Imagine if you snap that with a bullish buy today. Do you think it'll rally the next session? What do you guys think? If that happened. DXY is relentless. Yeah, you got to be really careful here. There's a very relentless US dollar. US dollar is absolutely beast moding. Which is not, again, is not a good thing for the markets. Don't get me wrong. We're talking totally different things. If you watch the first half an hour of this stream, I'm talking about doom and gloom. But then you come into the trading for the day session, well, you've just got to look at it on the surface. And at the moment, we're still theoretically bullish on a multiple timeframes. Let's have a look which timeframes are actually bullish still. So we're probably bullish on 1 hour, which could change relatively soon, or at least 1 hour, half an hour and less. We are currently bullish for sure on the 4 hour. We are still bullish on the 15-minute, and a lot of things turn bearish at around 38.69, as in that's where you kind of expect. So if we get down by a lot, I'd be very careful around the gap fill. That's the kind of thing that I would expect from the bear side. Not a double top on the 4 hour? Yeah, could be. Absolutely. I don't like to predict it's going to be a double top, though. At the moment, you're at the point of demand. You hope the demand comes through. So an example for your double top would be basically it busts through like this, moves up to fill the gap, ideally. And then at that point, do you have the capability of going, short and feeling short there? It's a very common kind of way the market will move. It busts through, gives you the confirmation that you feel short. A lot of people then jump in, relentlessly rides you backwards, steals all your money, and then splits it back down. So you actually have the capability, if you are really patient at this point, it busts through, comes back, does a switch, you get in on the switch. If you're that patient, damn, good work for you. So the market's open here, guys. We've got 38, the ding, 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 38.70 on the open. So we find ourselves opening right on it. We are now percentage down from the close anyway. We'll do the close. We're percentage down 0.7%. Do we find early bid here in these markets? In terms of stocks down, it's a bit of a smattering across the board. Amazon down 1.5. We've got Square and other hyper stocks and all of the tech down a little bit here, putting pressure on that 38.70. Let's have a quick look here and do a quick percentage change so you can see the sectors. Sector-wise, most come in poorly. A little bit of defensive sectors doing okay. Tobacco, soft drinks, furnishings. I don't know why that's doing all right. Hypermarket, something we've seen recently. Biotech also holding relatively good. Check out the 10-day here. Biotech 3.69% up. So, very well done by the pickers here on the channel for biotech. It's been very, very good. So this is where we expect these weird, creepy buyers to come back in if they're going to. Hopefully they do. Microsoft cuts earnings. Doesn't surprise me. I would say most people will cut earnings. I love Microsoft, but I would like to see cheaper price. Small bid for 5 points early. Not much. Remember, just because markets go up and you can't make sense of it, it's usually because everybody's too bearish. If everyone's sitting there bearish right now, what's going to happen? Well, maybe the market has to go up first. Switcheroonius. Oberst says, I am right. Upwards now. Look at me. Okay. Well done. I see you. I acknowledge you, sir. Tesla's fighting. Yeah, Tesla's holding. Probably more some hopium, hoping that Elon will buy some more Tesla stock with his Twitter fallout. I don't think that's going to happen. This is pretty much correct. Manius says the market moves on positioning, not fundamentals most of the time. Yeah, so I think long-term fundamentals no doubt work. Here's my biggest problem with fundamentals. And by the way, I love all markets. I love housing. I love bonds. I love crypto. Actually, I can't say I love NFTs yet, so I won't say that. I do love stocks, and obviously I love all of the businesses and everything. I think it's all great. But one thing is for sure. I do believe that crazy Albert Einsteins out there have coded algorithms for the banks that can do fundamentals so quickly and so well that it's so difficult to be good at it. The only way to take fundamentals now is X factor. Something that is literally not in the algorithm. That's my personal opinion. And I've been watching these markets for a while. I seriously believe that X factor is your fundamentals now. X factor. It will close long at 39.50. I'm going to put your little thing here just so you now you're held to this now. See, Oberst, here's the problem. You've made a call. If you're right, you're a hero. If you're wrong, you become Tesla Harry. Okay, we'll find out which one you are. Poor Tesla Harry. Only OG members of the stream will know who Tesla Harry is. Thank you very much to the 1,440 of you joining us today as well. Give it a thumbs up. Subscribe if you enjoy the content. So far, we're finding bid here early, which is good. A lot of hedges going to be entering the market following all this data. Believe me, these shorters are all over this market. They're frothing. The shorters are like 4-1 on this market right now. It's insane amounts of large trader shorts everywhere. It's like you would not think this market could even go up if you saw how many shorts are on this market. But that's the thing. That's what it does, guys. That's what it does. Poor Harry Rip. I wish we could get Tesla Harry back. I'd bring him on the show. He could tell us about Tesla's future. But he's not coming back, guys. You were too mean to him, okay? That's right, Paul. He was right. But Harry was eventually right. That's right. Tesla Harry, for anyone that doesn't know, he was calling bull all over Tesla. I know a few of you would have been, but Tesla Harry, he was relentless bull. When it was $600, he was relentless. People gave him shit. Tesla Harry was correct. But he left before he was correct. Oh, wait. What are you doing here? All right, let's go down small time frame. I want to see some 1 minute action. And yes, I'm focused in on the SPY. Why so terrible? Come on, ES. Give us some 38.80. All right, I want 38.80. That's what everyone in the chat wants. Give us some like weird little 1 minute. You know, we can have, we're seeing patterns everywhere. Got patterns everywhere. I don't want to see this weakness. Nasdaq now down 1.34. Interesting. Let's check out that Nasdaq here. Is that true? Nasdaq down really deep. Oh, Nasdaq. It's getting chunked. Oh, not good. All right, come on. Find some bid. You don't want to no underneath here, all right? Can't even find the 38. Well, this is not the best. We just broke through that low. We found that bid, never got above the 38.80, got to 38.80, which is ridiculous. And now we're finding initial short. So where's the next level this thing goes down to? Do we have to go even shorter first? Nas just made a new low. Has to be a false break now to the downside for this to work out for you. Nas really needs to find bid. Still not. What's leading it? Let's have a look at the sectors here. Okay. All the big tech sectors, semis, etc. Bank runs in China. That's been a story that's been eventuating for a while there, Sean. I believe that's been for months now in different districts. So it was some aggressive, nasty, algorithmic kind of short. We'll see whether it can find any bid. So it's through here now. So here's the issue. We just made a new low. We got underneath that level. In fact, that means many things have just changed trend towards the negative side. So while we can still find bid, what's going to happen for a day trader now is rather than saying, oh, to the moon, let's go back to 39.90 or something like that, the best you can kind of hope for is maybe a gap fill and then a potential short reshort off. Because at this stage, that's what this market's kind of showing us. So this has to be a false ends up being either a false break, but for day traders, they're going to have to change their parameters. And the parameters are going to have to be now, well, I've got to now sell the rip, as in like take profits if we get a rip later. Remember, this is the hour of power, the retail hour of power. So we open up, things often go in weird directions. It's not my ideal setup here today in terms of the way that I would like to structure usually. Now, if I was going down, and obviously I wouldn't have triggered anything at this stage, just so you know the way I would have triggered. So I would have got dangerously close though. So I'll show you how razor thin these types of things are. I'm not even kidding you. I wanted to see this thing snap those highs. That's how close it is. That's how close it is. This now becomes my level, and I would literally just put that ram in the sand and just be done. Okay. I'm only interested in that. I'd set a level and just walk off. I'm not even kidding. That's the kind of thing I do, because you've got to remember you need to set kind of parameters so you don't waste all your time in front of the charts. Once you've done it for long enough, once you've been doing it for like 10 years or longer or whatever, you can't sit in front of the charts all the time. You'll die. It's like not good for your psychology. So to limit it, the only way to do it is to set alerts for your key levels. But I'm not kidding when I said like that level here would have been a huge, huge thing for me. I think we're going for a gap fill on Apple. Let's have a look at Apple. It's an interesting concept. So where's our gap on Apple? A few people saying we doubt we'll recover. Turnaround Tuesday is the kind of concept you've got. Here's a little gap. That would push us down to 142.90. Yeah, for sure. The bears, once they pushed it through that point, that's really where the bears kind of take control. As soon as they got through 38, whatever it was, 60, 69, not good. Chesty Oz says no time in front of the charts equals no idea. You can put a little bit of time in front of the charts. You just have to be really efficient at it. And then you just set alerts everywhere. Any FX pairs you like? Well, at the moment, you'd like just DXY, hey? Haven't really been. I mean, unfortunately, it's just a rally at the moment on US dollars. So everything's just short versus US dollars and just continues to be short. No structure, no change of turn, no pullbacks, nothing. So Apple here, the gap is theoretically there. I'm not too sure about that one. US 500 at this stage broke through 38.69. It even gapped below. Look at that. It even gapped. It got so aggressive. It was like, nope, I'm going to gap between the close of the candles. So for me to feel more bullish about this kind of day, I would like to see it actually clean up this level here. And then at that point, I'd be basically buying. Personally, the way I look at things is as I would feel very structured. But yeah, at this stage, this is not what you want to see. US 30 holding. Yeah, big stocks may be holding. It's only 0.66% down. That'll be due to a sector holding up, which in this case is utilities. So, and probably some of the big stocks in there are doing okay. 38.53 now. BTC shorts rising. Yeah, like if Bitcoin bids up, don't bet on it. It's going to be very, very, very random. It'll move with the markets. And ultimately, the amount of shorts on this market right now, as I said, it's like 4-1 on the US stocks. Would gold increase now that it's no longer scarce? So is that actually confirmed that they found that weird gold pile? I actually never looked. Okay. Oh, that's a nice little bit of Little buying there. Let's have a look here. Let's watch some 5-second charts. Okay. Yeah, I think it's a fake story. Sounds random to me. Someone sent it to me. I never verified it either way. What happens when they start mining gold and asteroids? It's a great question. It's not going to happen for a while, so I wouldn't worry about it. The descending trend line still in play then, says Rob C. Yeah, look, I mean, it's possible. I mean, I've been warning that this rally is no good, but you can't take it from a day trade perspective until possibly in days like today, really. The reason why you couldn't really take it short yet is because you didn't get the opportunity to take it short. This is the first day we've seen actual trend change weakness. So we've got things like the 1 hour turnaround and everything underneath it turned down. When you're talking about these types of percentages, so you're talking about what 1 a bit percent to the trend line. Yeah, at that point, it depends on how you trade. Obviously, the only way to get the shorts usually is options. And I stand by that. I don't like shorting without options. That's the way I feel anyway. Meta is finished. Next generation doesn't use it. I would tend to agree with that. Facebook's demographic is horrible. It's a dying business. And the whole concept of the NFT world of, I'm not going to use it. There's no way. Personally, I have zero interest in that. People like it. People like the NFT story or whatever it is. It may come back, but it's just not interest to me. You've got to believe whatever you hold. If you don't believe in it, you can't hold all it. People made a lot of money in Tesla because they believe. You know, I've always believed in Apple up until recently. But I will say the M2 chips, well, M1 chip anyway, is very good. So next level for probably any demand buying is somewhere around this 38.40. What is this? 38.49, 47, somewhere in there. That wick. Could see it getting down there. Buyers, well, you can't really show commitment at this stage. Obviously, if it does start to bid, you're looking for this level. I don't believe in the metaverse. No, not really. Oh, okay. So it's not for me, but I do believe people will do it. I found out the most super chatted channels on YouTube. I really don't get it. I like videos of people. I don't even know what it is. I don't know what it is, but I found out that the most super chatted channels make no sense to me anymore. Like videos of, I don't know. Has anyone ever heard of this thing? It's like Hatsune Miku or something. It's insane. And there's like virtual concerts and it's a huge deal. It's a huge deal. And therefore, potentially the metaverse is a thing. Yeah, I guess it would be like ASMR, yeah. Salion says, it's true. I'm Ugandan and the government is currently salivating about the gold discovery. Oh, can you imagine? They're having a great feast or party or something. And I could just imagine that's when it got broken. Someone called up and they're like, hey, we just found double the gold. Someone's like, nah, man. They're like, yeah, we did. And they're like, they just get in the truck straight down there. Let's have a look. Let's have a look. I'm so happy. Don't underestimate younger cultures. Yeah, absolutely. You can't. That just shows like I look, there's probably a purchase there. I just don't think I'll get it. So what I'd rather do is just buy an index that has it or something. Reese says, I never got unboxing videos. Yeah, I mean, that's something that I do get. So then, yeah, you're right. That's the thing. The reason I don't believe the metaverse is mostly the paid component. I think it's like 50%. They have to change the structure. As soon as I heard that, I got disinterested. It was like 50% of all money made in it was going to go to Facebook or whatever they call themselves now, and 50% to the provider. In my opinion, someone will come out with a cheaper one. It has to be 30-70 split, or people won't do it. Very important, 37. So here we go. Well, I'm about to enter second area. There's the box that I was talking about before. So around this area here. Hopefully we see turn here. So scalpers will come in and have a look at this level. It is a pretty big zone. Mitchell Miller. Thank you very much, Mitchell. You always support the channel a lot, man. $20. Let's give him a clap, guys. Tom, you are the best. Your daily videos in the private Discord are the best. Thanks for everything. No worries. Yes. Well, thank you, Mitchell, for the promotion there. Yeah, if anyone's interested in the old Discord, you're always welcome into the public Discord, which has they're talking about it. Don't worry about that right now. You can see them. Where are they? The public Discord will have many people talking. They're coming on whatever they're talking about there. And then, of course, we've got the private one. We've got a schedule that we run each week and everything. So if you're interested in that, we do stream all the opens, or we stream the Tuesday, Wednesday, Thursday, and a whole bunch of other stuff. You can click the links in the description below. Thank you very much, Mitchell. Appreciate it. Hope you did all right last week. See you, BTC. Oh, don't give up on everything yet, guys. It's it's a Monday morning dumpster fire. Probably right, John. Probably right. Well done, $10. It's a good level probably to be removing. Guess we got our answer on the SPY. Yeah, SPY, all the small time frames have turned now. As soon as this busted that 38.69 on the real market, really bad kind of sign here. This is the next level though. You'd expect bidders to come in. So around this 38 area here, if the buyers are going to come in to try to fill this gap, they're going to do it, I would think, in here. Obviously have the patience to see it. DXY feeling useful today, Tom? Yeah, DXY is very bullish. So we'll leave here. We'll go with the sectors. We'll check them all out. Let's have a look what actually is happening here. So basically utilities, pharma, defensives, components. Yeah, just the utilities continuing to get through. Obviously, we never like to see these types of sectors if you're feeling bullish, because pharma, utilities, these are defensives. Tobacco's a defensive. Soft drink, which opened up, was a defensive. Those are the types of ones. Interestingly, biotech's held really, really well. And if you actually go into the biocheck chart, we just hit into that zone, IBB, and you have a look at bio, this was just a fantastic turn story. I'm hoping there's a little bit more in action in it too. I'm hoping we can get back up to around this level, and then potentially we'll see a dive. Maybe first up, bang, bang, something like that. But certainly a great spot there a few weeks ago by the community. Great turn, big volume. Obviously decreasing now, but yeah, it was pretty big percentages. So well done to everyone there. We are at the next level. Most people that were looking at that kind of short, if you did short it through 38.69 or whatever, well done to you. You've kind of got to a interesting zone here, and we'll see whether the bulls can fight it out. If you're waiting for the bull move, remember The bearish moves have been incredibly aggressive on markets recently. They have actually, the way of being safe in them has not been just randomly buying. It's been waiting for the turn. And a lot of turns haven't actually happened through the whole session, which is why you've got to be so careful, because these shorts, if you look at all the shorts that have happened over the last month, they've all been so aggressive. Look at how aggressive they are. The algorithmic shorts are insanely aggressive, insanely aggressive, insanely aggressive, super crazy aggressive. So you've got to be very, very careful. Make sure you practice risk management, guys. Be patient, react, don't predict. Unfortunately, we didn't see that bid above the 38, whatever it was, 80 and a bit. If we did, would have been good. Turns out just did a little quick falsy and then grabbed some liquidity early, and it's come back down to this level. If you do find bid here, I think you'd be very careful around the gap fill from a technical perspective. And yeah, hopefully it finds some bid here. Thad says 10 2-year inverted. Did you discuss that? Inversion doesn't matter once it first inverts. It first inverts, that's the sign. After that, how long does it stay inverted for is the next sign. But that will not help you in day trading aspect at all. Inversion doesn't matter from a day trader or scalper perspective. Just remember that, guys. It won't affect that day trade. All right, everyone. Catch you later. And good luck today. And we'll see you in a daily recap video tomorrow. Remember to subscribe, smash that like button. If you're interested in joining the public or private Discord, you can do so. The link's down below. Good luck. Bye for now.